Yesterday, last hour, of course, we saw a decent recovery. The bank Nifty especially closed almost at high point. But we have our first guest for the day. Nomura has raised their index targets for Asia ex-Japan equities. Chetan Seth of Nomura is now joining us. Chetan, good morning. Thanks much for joining us. What's the key reason for raising your targets on the Asian ex-Japan equities?
Yeah, thank you for having me on your show. So a few reasons, relative to our earlier expectations, I think a lot of incremental data points have come to fruition. So first, for example, if you look at the economic data in US as well as in Asia, it's generally been beating expectations. That's number one. If you look at earnings, whether it's US or Asian markets or Asian equities in general, again, relative to modest or muted expectations, the results have beaten those expectations. So that's a positive. Again, there seems to be a lot of optimism around a potential vaccine by end of this year or early next year, which is again another positive. And then on the US-China front, it seems like trade talks are progressing well. It seems like China is also ramping up on purchases of their farm products. So that's again an incremental positive. So lots of reasons. So we've upgraded our index targets as you suggested. But if you look at our index targets going into year end, we are still expecting some downside into Asian equities.
Chetan, good morning. Can you just repeat your index targets for India?
Well, I don't set the index targets for India, but our India team's current index target for Nifty, I believe, for March 2020 is 10,200.
Okay. Okay. Yeah. So you're not. I mean, your analysis is that you're not quite agreeing to the kind of bull run that you're seeing in the markets right now. You think this is just liquidity driven?
Well, I think it's partly liquidity driven. Retail flows have been quite strong. You can see those trends in India. You can see those trends in other markets in Asia, even US. When we talk to our foreign investors, generally people have been cautious. I think most investors haven't really been able to participate in this rally. So again, going back to our target prices, what it basically suggests is that, look, you have another 4 months to go into the year end. You will see a bit of consolidation either going into US elections or once you see data starts disappointing again after this initial kind of pent-up demand. So that's where the kind of cautiousness is coming from. But having said that, I think in the very, very near term, if you're talking about next few weeks, I think this momentum can continue. The point is valuations are excessive, whether it's India or other markets. But what we need to debate is what would lead those valuations to correct. You need a catalyst. At least in the near term, there is no such catalyst, right? There are risks, but I can't see any kind of near-term catalyst for the markets.
What about the trend as far as the US long end bond yields are concerned? You've written a note on that. What does that indicate in terms of which way things could head?
So we are watching the trend in US 10-year yields quite closely. And the reason for that is that it has some significant implications for some of the sector rotation aspects of the market. So in other words, let's say if the 10-year yields were to grind higher from here, let's say towards 90 bips or 100 bips from, let's say, 60 bips currently, you would expect that there could be some rotation within the US markets from so-called growth or secular growth stories, so-called tech, to some of the laggards like, let's say, financials, banks, deep cyclicals. So I think that's a trend worth watching. And of course, for that, one catalyst or event we are keeping a close eye on is the September FOMC. Let's say if the comments from the Fed calls for some bit of inflation targeting, average inflation targeting, you could expect some downside pressure on US 10-year yields, and that could lead to further dovishness, good for tech, but probably not good for banks. But the trend there is worth watching.
Okay, Chetan, what's the biggest risk to your bullish call on the Asian equities? Would it be second wave of coronavirus? Would it be US-China issues, election in US? What would be the key risks?
So I think one is obviously US-China tensions. So far the markets haven't really reacted to all these escalations. I think the market expectation is that these things will have to has to happen going into the U.S. elections. Because the Trump, the Trump camp wants to get re-elected, and China is essentially a bashing ground for them. The second risk is obviously second wave of virus, or call it subsequent waves of virus. But again, I would say it seems like even if we get subsequent waves, and we are already seeing some bit of evidence here or there in Asia, I think those second waves will not be as significant as the first one. And even if we see some bit of kind of rising chances of new waves, I think you will see that the public sector, or call it hospitals or government authorities, are well prepared. So I think those waves will be quickly contained. But there is obviously a risk to markets if we see kind of waves of new infections. And I guess as far as the U.S. election is concerned, the way I think about markets is that it is a risk for the U.S. markets, but if, let's say, U.S. markets go down, you would see some impact on Asian equities also. But the fundamental impact, whether it's corporate earnings or whether it's GDP, is going to be very less, which means that it's going to be kind of more sentimental impact rather than any fundamental impact. Eventually, I think the market will fade that correction if you see some correction in Asian equities around U.S. elections.
Okay. Well, Chetan, just before we invited you, Anuj was discussing, the Bank Nifty is still a rank underperformer in India. It is still 30% off year to date. You think that, last 3 days we're seeing it in catch-up mode. You think there's value in some of the banks? banks like HDFC and Kotak have also underperformed seriously. Even SBI. You think there's a catch-up that is legit?
Well, look, from a regional perspective, I think it makes sense to have some exposure to some of the quality banks in India. Mm-hmm. So if you look at our regional Asia ex-Japan model portfolio, we have ICICI Bank, which we've kind of pitched as kind of a laggard play. We've also looked at some of the value stocks in Asia ex-Japan, and there SBI kind of ranks pretty well. But I think you're right. If I look at the Indian markets, and I'm not an India specialist per se, banks or financials is definitely where there is value, because it seems like most of the market has already rallied. So that's where the value is. And of course, banks, the sustained rally in banks will only occur if you see continued improvement in GDP data, economic data, and which is obviously dependent on COVID trends.
There's an expansion of demand for sure. So anything in the consumption space that you guys like? I heard you say that you're not in India specialist, but on that pocket, any thoughts?
So as a house, my India team does like some rural consumption plays. So we've been kind of pitching Mahindra and Mahindra. That's a stock that they like, and that they've been pitching as a play on kind of recovery in rural consumption. And it seems like the trend so far from the rural consumption side has been quite positive. So that's one stock we like.
Okay. Chetan, since you have a regional focus, maybe this is where you can really help us. Inflation in India has been unusually high. The average of the last 9 months or 8 months is almost close to 7%. And I understand that other Asian countries are also grappling, albeit with a slightly lower level of consumer inflation, which is a little crazy at a time when demand has been destroyed. Do you think yields have troughed out? How would you look at this phenomenon?
Okay, so again, I cannot comment on India inflation trends per se, or the bond yields in India, but generally I would expect that given slow demand, or from here on, you've seen a pretty sharp recovery in demand from a low base. It's all pent up demand. From here on, the recovery is going to be slow, right? So it is quite possible that this kind of spike in inflation is just temporary. Eventually, my suspicion is that, generally speaking, inflation across the board should be on the lower side. So I would personally expect that, in the next few months or quarters, inflation should be on the downtrend. I can also share with you, as a house, our view is that in fourth quarter of this year, and also early in the first quarter of next year, we might see a cut from the RBI, so 25 bips each.
All right. We'll leave it at that. Chetan, pleasure speaking with you. Thank you very much for joining us and giving us the Asian backdrop.